Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online divorce mediation and valuation services in St. Louis, Missouri. Today, we will discuss growing the value of your business. And all of this is from a business owner and value growth consultant perspectives with Garth Tebay. Garth is a practicing certified public accountant, a certified valuation analyst, a master analyst in financial forensics, and certified in mergers and acquisitions analyst with over 46 years of experience. He's the founder and managing partner of Value Defined, a business valuation and litigation support firm in Toledo, Ohio, and an affiliate member of Business Growth Alliance, which provides value growth consulting and investment banking services to owners of medium-sized businesses.
What happens in a lot of transactions that I get involved in is when we get down towards the closing and we're doing the due diligence between the buyer and the seller, it is amazing how often we find tangible assets that are not owned by the business. They're on the books and records of the business. They appear on the financial statement of the business. Everybody thinks the business owns the assets, but in reality, the business doesn't own the asset. So when that happens, then there's the seller, you, the business owner, are in a very vulnerable position. You're now having to secure the ownership of that so you can transfer it to the buyer for a value, fair market value, as of the date of sale, but you don't own it. And it puts you in a very vulnerable position and may end up having to give up some of that price to the true owner in order to be able to transfer the asset. So a very simple process, very easy, is to verify the title of all tangible assets, real estate, vehicles, machinery. This may sound like a waste of time. It really isn't, because, did you ever see that commercial where I think it was Fram oil filters, if I remember right, and the commercial was something like, you could pay me now or pay me later, right? Well, this type of a process of verifying the tangible assets, it will be done at closing. Whether you do it now or whether you do it then, it's much better to do it now, because you have the time and the benefit of making sure that you maximize the value by doing it now. When you do it at closing, you have no flexibility whatsoever. And you want to make sure that you maintain the physical assets, the values going forward, which requires physical observation of those tangible assets routinely, and making sure that you perfect the title of those assets. Melissa, are you back with us?
I think so.
Okay. How often, Melissa, have you run into a situation where you're doing a valuation and you look at the balance sheet, it's got a building on the balance sheet. And then when you start to do the valuation and you start looking at the title, you realize the company doesn't own the building. It's actually owned by another person. And somebody in their infinite wisdom, somewhere along the line, said, well, just put the building on the company and we'll put the mortgage on the company, even though the company doesn't owe the mortgage. And instead of paying rent, we'll just make the mortgage payment. It's those crazy things that you see that make sale transactions extremely difficult. And that's why we go through this process of perfecting the title of all assets before we do a closing. So this is a better process to do up front as opposed to waiting till you actually sell.
Well, and I think the benefit of working with somebody who understands valuations and understands the process of selling a company is that some of those things that can really slow the process at the end, or when you're
Yes.
closing, not understanding how your assets are titled, not understanding certain specifics of the operations, does start to maybe ding the price, because there's this confusion. Like, how do you know? Are you misleading us? Are you tricking? And it's like, well, maybe I just didn't know it. It also, in an auction style process, if you don't know some of the answers to some of these questions that they lodge at you about your financials, it becomes apparent that they're the only ones that are looking at this company. And so I think working with somebody like you, that's a consultant, but also a valuation person, is really helpful, because you're going to understand more about the process of selling your company. And I feel like that's where people get a little stuck when they actually go to sell their company. It's like, oh, I didn't know that that was going to mess things up. Well, you would already give that advice a year, 2, 3 years ahead of time. Things can be cleaned up. If somebody needs to do like actual reviewed statements, accounting statements, they could get that done and have a 3-year track record for when they go to sell. A lot of these things can be found out, but a business owner wouldn't necessarily know them going in, up front. Whereas a consultant could come in and say, oh, here's a list of things you need to be concerned about. And I think that really increases the sale price as well. A sophisticated seller is going to be really good for sophisticated buyers, and most buyers are sophisticated buyers.
That's correct. I mean, all the points you just said are absolutely right on. And when we go through the process of selling a business, the better the accounting is, the higher the level of the outside accounting, including audit, increases value, because it lends credibility to the overall numbers that the buyer is relying upon in order to make their decision of how much they're going to pay. To the extent that they ask for information, they're going to ask for everything. Mm-hmm. You won't believe how much they're going to ask for. And when they ask for it, if it takes more than a day to get it, you're already making a problem as to the credibility of the information. Mm-hmm. They're expecting instant access, because if you're organized and you've got good systems in place, you should be able to generate that in a matter of seconds. You are absolutely right, Melissa. That is what happens. And then they start to get concerned over the numbers. They start to get concerned over the value. And before you know it, you're negotiating the price.